Good day, fellow investors. Stocks always go up might be wrong. Let me explain. We just made a video how we might be looking at the last decade ahead, certainly from real returns. Fly to Fly said in an interesting comment, nothing wrong with the comment, that dollar cost average into the S&P is easier than picking the right companies out of 1000. Okay, that's correct. It may not be the best, but picking the right companies is multiple times more difficult. I'm doing a little bit of both, but I'm significantly losing on my company's selections. Nothing wrong with Fly to Fly, but I want to discuss whether it is correct that stocks go only up, and that sentence might actually come from the 40 years of confirmation bias that we have had, or from the long-term chart that stocks always go up, but then again, people forget about these lost decades or two that happen here or there. What is confirmation bias? Confirmation bias is the tendency to process information by looking for or interpreting information that is consistent with one's existing beliefs. This biased approach to decision making is largely unintentional and often results in ignoring inconsistent information. So let me give you the opposite view on stocks always go up, and then you will have another piece of information to make your life investment decisions, because at the end of everything, it is about your money, your life, and your financial goals. Never forget that. Now, the first antithesis to what I have to say is that you are not allowed to ever say anything against index funds, and stocks always go up. And already there will be plenty of comments in the comment section below saying bad things about me, saying this or that, because that is the nature of the environment we are in, especially after a 40 years bull market where stocks, yes, did only go up. The issue is that at some point I will unfortunately be right. And we can look at this chart and we don't know whether we are here, or most likely we are here, and then we will have a lot of down, and this was 70% down in real purchasing power. That's something you don't want. But let's look at the fundamentals, which is again something that stocks always go up, people never look at. If I look at the cyclically adjusted price earnings ratio, that is currently at 27, and compare that to the market. If you want to know what is the Shiller price earnings ratio of the cyclically adjusted price earnings ratio, is a price earnings ratio based on average inflation adjusted earnings from the previous 10 years. So it works around business cycles to give you a fairer explanation of the economy. 27, so if we look at historical data, when the CAPE ratio was at 27, the average real returns over the future period were around 4% for the various markets. That is not bad, but also not great. However, there were also times where for the S&P 500 the returns were pretty negative, and those were pretty negative long term, even for lower P ratios. Let's say at 15, everything above 15, you can see 10 to 15 years return be pretty negative. A few percentage points per year negative over 10 years is 30-40% down. So stocks always go up is extremely dangerous in my point of view. And now comes the question, Sven, and have you beaten the market? Nobody has consistently beaten the market ever. It's not about beating the market. It's about doing good for yourself, creating good absolute returns for yourself, no matter what the market does. I don't care about the market. But as we are answering that question to get before your comments, started investing in 2000 to 2007, I made 5x then. Crisis, I lost 20%. That's 0.8x. 2009, I invested, I made 4, maybe even 5x on my money, including dividends, but okay. 2016, 2018, we were moving, buying a house, kid, this job, whatever. I did just 1.2 likely with Nefsun, but I made good money with the real estate that we bought back then. You can check this video if you're interested in that educational perspective, but that will not be included here because not in stocks. Then from 218 to 222, I made again 1.8x my money, and that has been documented on my research platform. All in all, I've made 34 times my money on average. Compare that to the S&P 500 since 2002. I did a little bit better than the S&P 500, and therefore you should absolutely consider me totally biased. So this is really the extreme of the picture. So you have to always see what best fits you. So I'm just giving you this info as a counter information to what is likely your confirmation bias. And of course, S&P 500 over time, dollar cost averaging, buying when it goes lower, buying more. So if you are such an investor, you should be buying more of that freaking index fund now. Will do okay. You will accumulate wealth. Nothing wrong with that. But my issue with stocks, and let me know in the comments if you want me to discuss this in depth in one video, is the mindless approach to the, let's say, stocks always go up investment. If you don't think, you miss up on great life opportunities that are there if you think, and you don't just blindly invest in something, but you think, okay, this is the return now is likely 4%. Oh, here my return in life is 10%. What do I do? Those who think blindly do this and miss on the much better, miss the 5x in 20 years and the 20-30x, which makes a huge difference. That's the only problem I have with index funds. 5x is great for most people, but my bias is, okay, can we do better for our financial lives? And maybe in the next 20 years, it won't be 5x, it will be 0x. So if you do 5x, you are much better off. Thanks for watching. Subscribe if you want to think about your money and investments, and I'll see you in the next video.